What's up, everybody? Today I'm going to be talking to you about credit scores and what you need to know about your credit. The first thing I'm going to address is where do your credit scores come from? So the three credit bureaus is TransUnion, Equifax, and Experian. A credit score can get you a home loan, it can get you a car loan, it can get you business loans, personal loans, and it's also a way to be able to get a loan to go to college. Now, there's also something known as a FICO score. A FICO score is something that most banks look at when you're trying to get a home loan. And that score can be a little bit different than your other three scores from TransUnion, Equifax, and Experian. If you want to be able to get a home, you have to know that you must build your credit. And the way that you build your credit is by opening up three or more credit cards or any type of form of credit. It could be a loan, it could be a car loan. Now, when they're looking at that, they also want to see that you have 2 years or more of open credit. What are the things that they're looking at? If you're someone that they can trust to lend you money and you'll pay it back. Let's say that you let one of your friends borrow money and then they told you they were going to pay you back. But next thing you know, you haven't got your money and it's been a while and it's also been past the time that they said they were going to pay you back. And when you see them, guess what you see them doing? Shopping at the mall or hanging out, balling at the club. And then I know you're wondering, yo, how you up in here and you know you owe me money, right? So basically, what does that do to you? That makes you not trust them and they're not trustworthy. So would you give that person money if they came back to you again after not paying you and asked for more money? No. Why? Because you don't trust them and now they have a history of not paying their bills. So that is how credit works. You build your history, and with your history that is tracked through your social security number is a way that they can look and say, hey, this person pays their bills on time or this person don't pay their bills on time. Now, a credit score can be as high as 850, or you can have no credit. And what does that mean? If you have no credit, a person may say, if I don't have any credit, how in the world am I supposed to get any credit? Nobody won't give me a credit card because I don't have credit. Well, okay, here's how this works. Basically, this is the stage where you got to crawl before you walk. And what that means is you are at the stage where you have no credit and you have to get to a point where you need to start building some credit. So how do you do that? The way you do that is you apply for a credit card where you put your own money on this card and then you spend it. It's almost like a debit card, but it's actually a credit card that you're using your own money in advance. So you put your money on a card, you use the card, and as you use it, the credit card company reports all of this activity to the credit bureaus. And when they're reporting this to the credit bureaus, you are now building yourself up some credit. And once you get to a point where you have shown that you are spending and paying back, even though at this time this is your own money in the beginning up front, once you get to a point where you build a good report for yourself by them reporting your activity, you now can apply for credit cards where they give you the credit and now you use their money and then you pay them back. Always keep in mind when you're doing that you are paying interest rates, okay? So that's one thing that you need to totally understand. So what that means is, for example, if you went out and you spent something for $50 and you have an interest rate, you might be paying back $55 because that interest is the money that the bank makes and off of you for letting you borrow their money up front. So that's what you have to understand about that. Back to what I was saying. Now that you have built a nice credit report for yourself, you can now apply for the other card. When you have this other card, you are starting to build more and more and more credit, and they're reporting. You might get to the point where you can open up other credit cards, or now you can qualify to get a loan. When you have all these things, you are now establishing credit, okay? Once you establish credit for more than 2 or more years, having 3 open credits, they have to still be in use. You have to still be using them. They have to see activity. If you stop using these cards or you close these credit cards out, you don't have no more credit. So they have to stay open and you have to be active with these cards, okay? One thing you don't want to do is get caught up in spending so much on your credit card that you can't now afford to pay it back, or you find yourself in debt. Credit can be good, but it can also be very, very bad too, because then you can end up finding yourself losing everything that you worked so hard to get, and you don't want to do that. So I'm going to do a quick little recap. Credit scores, there's 3 of them. They come from TransUnion, Equifax, and Experian. The highest score that you can have is 850. The lowest score you can have is 0. There is also a FICO score. What does a credit score do for you? A credit score basically tells people everything that they need to know about you when it comes to your spending habits and paying your bills on time. That's what credit is about. And if you do these things the right way, then banks will trust you and they will be able to lend you money when you ask for it, because they know they will get it back. Stay tuned, because next I'm going to teach people how to actually learn to apply for a home loan and the things that you need to be able to do to get a home loan. If you do the right things, you can get what you want. That's what you need to know. Please hit like, please subscribe, and please share.